You know the community is not quite where they should be when Trey is suggesting to buy puts on AMC stock, or when Ape Father gets 7,000 views on a video that is titled "Do Not Buy AMC Anymore. It is a waste of time" by GME. Or when Lou says, "Only way I see high AMC numbers at this point." Don't get me wrong, I like all of these guys for their own reasons in their own respectives, but it's all bullshit. It's all wrong. It defeats the basic principle of investing. And this is a saying that each and every single one of you guys has heard before and you know of. Buy low, sell high. And a matter of fact, the data will show us that when these videos start to come out, when you start to see even creators that are supposed to hype you up and be your hype man, hopefully that's not the only reason they're being the hype man. Hopefully they actually provide some due diligence and a good opinion to why they are saying that stuff. Topic for another video. But when those kind of videos start to come out, that's when you want to be a net buyer of AMC stock. So here in this video, I want to talk about just that. I want to talk about why this whole thing is bullshit, why people are saying this, and why I am going to be a net buyer of AMC this week as far as shares and as far as call options. Now, if you're somebody that is bearish on AMC, you don't necessarily want to sell your position. You don't really want to buy puts because one day you will wake up with another catalyst. AMC bought XYZ business and the stock is up 20%. You don't want to go through that stress. I will provide to you guys a safer way to make passive income on your AMC investment. And I do also want to go over the technical analysis, look at when we could see the next rally for AMC with the options, and really tell you guys what needs to happen for that next rally, and kind of take a look at what is ahead throughout this upcoming week. So if you guys find value out of this video, hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. I think this is one of, if not the most important videos at the right time to push out to as many people as possible. So if you guys want to do your part, help push this video out, get everybody on the same page, then do all three of those things. That's the best thing that you can do for free 99 to help strengthen the community. If you guys want to take it an extra step and come trade with me as well as about 100 other traders in a trading group, I post my trades, other traders post their trades. It's a great place to be. Check that out, link down below in the pinned comment. We have been killing it so far in 2022. But besides all that, that is neither here or there. Let's get into the topics of this video. All right, let's briefly talk about why you should never buy puts on AMC stock. In my personal opinion, keep in mind I'm not your financial advisor, so each individual situation is going to be a little bit different, but puts and options in general are only supposed to be used as insurance. Obviously, if you watch this channel, you're probably a degenerate gambling bastard just like myself, and that is all fine, that is all dandy. We love to trade options here on this channel. That's mostly what we do in the trading group, link down below in the pinned comment, but never buy puts. We never buy puts on AMC stock. You'll never see me put out an alert that I'm buying puts on AMC. Now, why is that? Well, it comes down to a couple reasons. This is not a pump and dump penny stock. There's a business behind AMC. And what is the underlying business actually doing? They're investing in other companies. That's a net positive. Their revenue, their earnings, their profits are going to be record high in 2022. That is a positive. We're finally getting the backlog of movies that have been filmed over the past 2 years put out in theaters in 2022. That's a net positive. You have a group of people that are buying and holding a stock with many catalysts on the near-term horizon. Meaning you could wake up and AMC's up 20 to 50% on any given day and it wouldn't be a huge shocker. That's also a net positive. And you know you have over 20% of the float that is held by short sellers that need to cover on their position. So in regard to the MOAS and to a short squeeze, that is a net positive. And why is this ultimately a bad idea? Because AMC's stock has already fallen a lot. If you were going to buy puts, it was not now, it is not this week, it was 2 weeks ago when the stock hit over $30. That was the time to buy puts if you were bearish. But who is coming out and saying to buy puts? Virtually nobody. So that in a nutshell, and that explains it all, is why you shouldn't buy puts on AMC stock. But what is a better alternative to that? Because I personally do this with my AMC position, and it actually helps out the community. Well, you can act as the market maker. You can go to the option chain and sell a call or sell a put. In the case of selling a call, you can sell one call per 100 shares that you own, and that is considered passive income. So if your average cost on 500 shares of AMC is $20 per share, you could go out, in my case, I would do the May 20th expiration, go to the $25 strike, sell 5 covered calls for $159 a piece. You would collect almost $800 for doing that trade. Your worst case scenario, if AMC is higher than $25 per share, you have to sell your stock at a profit at $25 per share, but you still collect $800. Now, if you're bearish on AMC, this is why it's so important. If you want passive income and you're bearish here in the next couple of weeks, then you'll keep that $800 for free. No obligations there. If AMC closes under $25, you're good. You just made $800 for free. On the side of selling a put, little bit different, kind of the same concept. If you think AMC is going to go down, but it's not going to go down that much, then you could go out to, again, like the May 20th expiration, sell a $15 put. Difference here, you have to put up $1,500 to agree to buy 100 shares at $15 per share. If the stock dropped to $10, you'd be forced to buy your stock, that 100 shares, at $15 per share. Principle is the same. It's passive income. You keep the 146, especially if AMC stock runs to 30 again, and it bounces here between now and May 20th, you'll keep that 146 for free. And if you did 5 contracts, again, it would be, $730 that you would keep for pure profits. And even when you factor in the break even here, that's $13.54 per share. That's almost the low that we seen in March when we were getting hit with a lot of bad news back to back and the markets were at a low. I personally don't think AMC will continuously drop all the way down to $13 again. So it's not risk free, but it's a lot less risky than buying puts on AMC, waking up, and the stock is up 20% in a single day. That's the last thing you guys want to do. Now, if you're trying to day trade puts on AMC, that can work. But a big reason as well, I should have put this, in the video about a minute or two ago. Another big reason you don't want to buy puts on AMC stock, in my personal opinion, is that even when the stock goes down or it goes up, the premium is high, very, very high for a cheap stock like AMC at $18. Normal stocks do not have this kind of premium. It's because the implied volatility is so damn high. So the markets are expecting this thing to either drop to $5 per share or rip up to $100. So they factor that in to the premiums of these options. So you have to see very aggressive moves over days and weeks that you hold these options to actually make money on these options. Go look at another stock that is comparable to AMC in price, and you will not find options that are this expensive. It's because implied volatility can be your friend when you're day trading, but if you're holding on to puts or calls, as you guys probably do know, if you've bought calls in the past year, they decay quite rapidly once you get down to expiration. Implied volatility, not your friend when you hold options without a catalyst or without a move in your direction, and a substantial move at that. So that's why buying puts on AMC does not work for 99.99999% of investors in AMC. But that's some passive income strategies that you guys can implement. More on that, ask me questions you want down below in the trading group if you guys want to be a part of that. If you don't, that is all fine. That is all dandy. But we need to talk about the other things that I outlined in this video. So what is ahead for AMC stock this week, and what do we need to see for the next big rally on AMC stock? Well, what's coming ahead this week is going to be CPI data that does come out on Tuesday, and then you do have PPI data that does come out on Wednesday. And why is that so important? Well, CPI, as you guys do know, consumer price inflation. So that's going to move the markets a lot. That's going to really give us more so confirmation of, hey, it's not looking so good. We got a really bad reading. If the next one is bad as well, shit's going to hit the fan. The Fed is going to push us into a deep recession, and the markets are going to freak out. AMC could very well go down. I would expect it to kind of slow down like we seen before this rally, right? AMC had been, selling off, but it wasn't that aggressive. And you actually seen some green days before really the markets fully bottomed. But before this big rally as well, it kind of slowed down. These sell-offs were not as aggressive. Like, look at some of these days, guys. We would open up higher, come down, open up higher, come down, open up higher, come down, and then we started to open and come straight down and then rally by the end of the day. It started to kind of reverse itself slowly but surely, and then we started to head into that next big rally. And CPI is going to cause possibly some of this slow downtrend move, but I think it's going to be a lot slower in stocks like AMC that have gotten beaten up, that really have not seen this euphoric bounce in the markets. There's a lot of stocks that have not really played along during this whole rally. A lot of them I'm personally invested in. Look at PayPal, look at Square, look at SoFi, look at Affirm, AMC, DraftKings. They've hardly, if at all, played along with this rally. So I think the sell-off will slow down in a lot of those names that I just mentioned, and obviously many more, whereas possibly the large cap tech stocks might start to come down in a meaningful way. You might start to see other market leading stocks that do start to come down as well. That's only my opinion here. I do think CPI will be bad. The markets are expecting that. So you're really going to need to see something higher than 0.5% month over month inflation to really get the markets to freak out. 0.6% inflation takes the estimate at 0.5% month over month inflation from 6% to 6.6%. 0.7% inflation takes the year-end inflation reading to over 7%. Markets will freak out if that number is above 0.5% inflation. Subscribe to the channel if you guys have not already. I'll keep you guys up to date with everything macro that will affect your investments. That's also something that I'm kind of disappointed that the community does not stress enough, is what is going on with the macro. It really doesn't matter all too much what happens with AMC stock on a day-to-day basis unless there is a catalyst. When the markets are either rallying to the moon or they're dropping, AMC is affected by that. About 70% of all the trading activity is done by trading algorithms, and they trade based off of mostly market news headlines, market data, and market sentiment. So that's really what we have in store for this week. Couple Fed speakers as well. We'll go over all of this in more detail, really what I expect to happen on a day-to-day basis, where the money is to be made this upcoming week, because I think it's going to be a very, very busy week. We'll talk about that more on the 4 o'clock video. Stay tuned for that one. You also do have bank earnings that start this week. I believe Goldman Sachs and JP Morgan do report earnings this week. That's going to be very important for signaling to investors, hey, is a recession coming? Are consumers dramatically cutting back on spending? What is going on with the general public? That is what we will get a glimpse on coming on those bank earnings. So all of that will affect AMC stock. It will. The stock will likely come down a little bit this week. It might rally. Really, what will cause AMC to rally, and this is the second part of what I want to talk about, is a catalyst. This market is only reacting very positively to catalyst, and they are very short term, and then they are gone. They are here, it's great, and then they're gone, and it's really bad. That's how stocks are reacting. Now, we want to see if AMC holds up higher than $13 per share, our previous low, before we started to get all of these catalysts, like Ryan Cohen buying 100 shares of GameStop, or AMC investing in Hycroft. You want to see, do we hold up higher than $13 per share? That's going to be very bullish, and I think that is with certainty going to happen. But you need to see a catalyst. And we know AMC is pursuing up to 5 different businesses, or looking into up to 5 different businesses to invest about $500 million into. Now, on a fundamental basis, that is a really, really, really good move. That capital is much better allocated to buying new businesses or acquiring stakes in these businesses rather than paying off their debt. Why? Because like with the example of Hycroft Mining, they put $27 million into that. People said, no, you should pay off your debt with that $27 million. Like it really makes a difference. They would pay out about $2.7 million per year on interest on $27 million worth of debt. But AMC just made over $27 million investing in Hycroft. So that's like a, 15, 20 year profit comparatively to paying off debt or investing in Hycroft. It was a net positive. The markets will react positively to that. I don't know what day that'll happen. You definitely don't want to hold puts on the day that news does come out. But it'll probably come out here in the next couple of weeks. I imagine Adam Aaron, team of executives are trying to figure this out, figure out what businesses they should buy as soon as possible after they've seen the last reaction. They have their money on the line. They want to make money. So that also works against the whole buying puts principle, kind of to revisit that a little bit. But that's really what to expect this upcoming week. We'll look at the technicals on the daily candlestick chart in just 1 second, but that is really what will cause the next rally, is going to be a catalyst only. A catalyst. Stocks are running great with catalysts. They're not doing dog shit. Nothing without a catalyst. Keep that in mind. We have catalysts on the near-term horizon. Don't get caught with the damn puts. That's all I'm going to say. Now, as far as the daily candlestick chart, we did close about 3 pennies under the 50-day moving average. So a little bit of an indecisive move right here. We really closed, you could call it on the 50-day moving average. It's not under substantially. It's 3 pennies under. So it's not a huge deal when it comes down to it. And it could bounce up or it could drop. If we drop under the 50-day moving average, we close under that firmly. Let's say we drop to $17 per share by the end of Monday, then that's not going to be a good sign. Then we're likely going back down to $15 per share. But the stock has went straight up. It's come straight back down. We're going to see a bounce. And like we talked about, the intraday moves on AMC can be very explosive even without catalyst. So when that catalyst does come, or good news in general comes, the stock is going to absolutely tear. And if we can hold the 50-day moving average and get a bounce back up to about 2019, 2021, that's going to be really, really good for the next leg of this rally. And this next leg of the rally will likely take us much higher than $35 per share. The MACD, on the other hand, has went incredibly bearish in a very short amount of time. We were bullish for a while. Even back here when AMC was just off of its lows, the MACD started to go bullish. It was bullish this whole time during the sell-off. Now it's went incredibly bearish. What has happened to the volume? It has went down. So traders, they come and go. The traders came, they went, they will be back. Ladies and gentlemen, this is not a stock you forget about. Everybody knows about the MOAS, the mother of all short squeezes. So they will be back. Do not question that for a second. The RSI is at 44.29. So the situation here is really 50-50. It could go either way. We could fall under the 50-day moving average. It might turn into a level of resistance again, or it will be confirmed as a level of support. If we do hold the 50-day moving average by the close of Monday, I personally think we're going to see a big move back to the upside. That's always going to be a good sign if you can hold the 50-day moving average. And on Thursday, that's exactly what we did. Look, we came very close to the 50-day, found a lot of demand and support around the 50-day, and bounced straight back up to close somewhere in the mid-20s range after coming down all the way to about 1850. Bounced all the way back. Friday, that's a trickster. We'll see on Monday. That's all I do have for this video. That's what you guys need to know. Hopefully you learned something out of this video. If you did not, hopefully you found a good perspective out of this video from somebody that is not trying to be your cheerleader here. I don't care what you do with your position. Sell out. I honestly don't care. The more people that are bearish and sell out, the more buying activity we will have when the stock does ultimately go back up. That's the bottom line here. So, like I said, you guys found value out of this video. Hit the like button, subscribe to the channel. If not, don't do anything. Thank you guys for your time. Thank you for watching. If you guys want to come join the trading community, like I said, link down below in the pinned comment, and come join us on the live stream every single day, Sunday night. So tomorrow, 10 p.m. to 11 p.m. Eastern Standard Time, but Sunday through Thursday night, we go live every night to talk about futures, talk about the next day's trades, get caught up to date with any news that happened throughout the day that is affecting the markets. That's where you can ask all of your questions, and I try my hardest to answer every single question. So thank you guys for watching, and I will see you in the next one.